If you're looking to buy land and build a custom home this year, then you're going to need a construction loan. But what's the right construction loan for you? That's what we're going to talk about here is the local bank versus our one-time closed construction loan. And what are the differences? We're going to talk about all of it. First up, let's talk about the local bank, okay? Anytime you pick up the phone or go down the street to your local bank or credit union or whatever, then typically they're all going to offer the same type of construction loan. First of all, you're going to need to have your land. So either you're going to need to have already paid cash for your land, or you're going to have to go to them first to get your land loan. And typically, this is going to average between 10 to 30% down for your land loan, okay? So now that you've got your land under contract and closed on your land loan, now it's time to go back to the local bank to get your construction loan, of which you're going to need 20% down, pretty much on the build price. They're going to use the land equity in this case, but ultimately you're going to have about 20% down of your build price, okay? So if your land was $100,000 and you put down 20%, you put down $20,000, then you have $20,000 in equity. But if your build amount, now that you're trying to qualify for your construction loan, is $400,000, then you're going to need $80,000. So if you only had $20,000 in equity, then you're going to need another $60,000. And that's a rough number. Each bank is going to be a little different, okay? But, okay, this is your second loan that you're getting with the local bank. After the home is built, then you're going to go back for your third loan with the local bank, which is your permanent mortgage, okay? So it's 3 different loans, 3 different closings, 3 different closing costs, 3 different types of qualifying, okay, on all of that, okay? And it's fine. If you were looking to self-GC or do an owner build, then I would say go that route. If you have a ton of equity, you know, and you're trying to go with a small contractor, then I would say go that route, okay? It is for a lot of people, but it's not for everyone, okay? And also sometimes they even require you to have additional reserves, like 5 to 10% that they make you put into an account in case of, like, they call that a contingency. We build that in, I'll get to that in a second, but they require you to have that as a cushion sometimes. Again, each bank will be different. You'll need to find that out. But now let's talk about the one-time closed construction loan and who it's right for, okay? Primarily, it is going to be based for your primary residence, okay? First of all, if you're trying to build your own custom home and all of that. But it's the benefit here is it's minimum down, okay? So we can do a one-time closed construction loan. Wait, let me back up. When I say we, you can't call the local bank or the credit union to get a one-time closed construction loan like this. It doesn't exist, okay? There's like 90% of banks do the first one I gave you, the construction